Week 24 for me, done. Sorry I missed the last couple weeks. I cut back a little bit on my trading, trying to stay a little bit more disciplined. I've been traveling a little bit also, and in all honesty, this microphone, I keep saying it, but I can't afford another one, so it's kind of whenever this thing works. But I really have some good lessons here that are meticulous. I just need to work slightly better on my entries, and I'm tracking a lot of data to cover that side of things, but I want to just get out my ideas on some of these setups that I've been playing. So this was a March 16th here, and seed. So March 16th was actually a couple days after the initial spike here, as you can see in the daily chart. And then I had a day of pullback / consolidation, whatever you want to call it here. But then this morning of this day, it gapped up and it made a pre-market high that was roughly in line with 2 days back's high intraday. So you can kind of see this range, or not range, but this breakout point that is forming here. So immediately I was interested. It would just be in determining where my entry would be, and this is actually a pretty good entry. So I waited for the breakout, and by playing safer, I'm thinking more confirmation breakout and confirmation dip buys. So that's what I was playing here, and you can see it pulled back to support, roughly 140s, and it was consolidating. If we want to zoom in a little bit more, it still had its volume, but it was holding the same level. And I think I was entering somewhere either this red or this green here, and going for the confirmation breakout, which would then lead to basically straight up spiking. And I couldn't do that, and I think my risk was 38 or something, so it stopped me out. And sometimes that's all you're going to get on this type of play, where you're going for basically the breakout over a consolidation day. This one first spike is all you're going to get. It has some to do with the overall market, some to do with float size, but yeah, I mean, you win some of these, you lose some, and buying right on a confirmation breakout is giving you best odds for that. So idea-wise, that was good. I like that. Moving on to NFEC. Let's see, I was trading this, I think, on the 19th. Yeah, so it's this first big update here, and yeah, this one right here. And basically it went from 1 to 370. Massive volume, 50 million plus. And you can see there's some tops here. So it's a former runner. And I mean, I just want to get into the day chart and show you. I took a really small position on this because it was so overextended, but the reason I got in was because of the risk reward, first off, and second off because these low floats have just been running non-stop with multiple legs. They'll run up in the morning, then they'll consolidate, they're going to break out that morning spike, they're going to consolidate, break out again, and that's how they move right here. So I've seen this pattern over the past week or two where it makes where it double tops and triple tops, but makes these higher lows. And what I've seen in the past is that they make a higher low, and then after a certain amount of spikes, it's not always accurate, but I mean 2, 3, 4, or not 4, but like 2 or 3 normally, which is what this did. They break out, and that's what's been going on. I mean, you could argue this has been a little bit they're all overextended, but a little bit more overextended than others. But I mean, on the speculative market, that in the past, before the market tank, when these things have been running, it has been hot. So I bought in on this higher low. You can see here, the low here is 283, low here is 302. You get some more here at 307 and 312 right here. So when this was basing and kind of curling up, that's when I took my position, and I think I was risking either this low or this low, but my risk was tight, like somewhat tight. I mean, this is still a big range to risk, but when you have the risk reward, or when you have the possible reward of this either double topping, which in itself it tops at 360, I'm in at the 330s basically, that's 10%, or on the other chance that it actually breaks out, your risk reward is massive. And I mean, I think I've only been risking like 15 to 20 cents. So like a roughly 2 to 1 worst case scenario if it does double top. Not worst case scenario, because I did lose money on it when it broke down, but I do think by taking a small position, it's obviously speculative or in the midday, but when I've seen this so many times and when it's happened like that, yeah, I gotta be in the play, I think. Yeah, so small size, but again, I mean, I would have liked to have been on maybe on this dip, but I didn't see that one, I saw this one. But again, higher lows, I mean, you gotta take that chance sometimes. I don't mind that. Oh, and sorry, I want to go back to seed really quick, because the one big thing that I want to say that I learned, I actually didn't even say it, so yeah, the 16th here. And we have to find the answer on the multi-day. So it was topping here, roughly like the 150s, you can say. 150s up here. So if we look at resistance, we can see there's a lot of consolidation in this area, like 150, a couple support levels held, then a couple of resistances here. But over here, this is a big one. 160s, yeah, but shorts are going to come in on 160 and pile it down and start shorting in the 140s, 150s. Again, tops here. So 150 we're seeing is pretty significant. It's got a ton of just bag holders who are going to sell right into it. So knowing that, I mean, even though this was a great confirmation dip, buy in the dip, I need it really to wait till it broke 150, maybe even 160. Or I needed to get up somewhere lower, and in the hopes I would bounce. I wouldn't have gotten in on these dips because I didn't like them. But I mean, this was really truly the one place to buy it. Yeah, you really have to be concerned of overhead resistance, especially this strong in this many places like this, because when they get the spike, they're going to be selling into it. And great lesson to learn for me to check that. Even though the pattern, the 3-day pattern, the 1-day pattern is ideal. It's basically unbeatable. It's perfect. But when you go out like this and you see all this resistance up top, and when you're spiking like that, a quick morning spike, is you gotta not trade that because of that. All those sellers selling into it. So no wonder it couldn't spike. And that's the big lesson here. That changed my mindset a lot because I never thought of overhead resistance on morning spikes. I always thought about those into afternoon run-ups and grinds up. So it was a deal. I lost $30 on this. So going away with that information, with that knowledge, with that lesson for $30 is a steal. So that was why, again, why this trade was so good for me and what it opened up in my eyes. Even though something could be so perfect like this, I'm going to get into a trade later. I guess we'll do it right now. BGI. This is what I traded this morning. And the indicators were all there, except the factor here wasn't overhead resistance so much. It was the overall market. And I use a indicator number addition calculator basically, and based on indicators, this was an amazing buy in my regard based on what I've traded, the patterns I've tracked, the float, the market, well sorry, not the market, the float, the pattern, the basing price action, the support it held, everything. But the key was the spider this morning. All the markets have been tanking, and they've been taking out support. So this is the last trade I want to get into with a good lesson again. Same kind of a seed. Things can be looking in your favor, and the trade's not going to go your way. So I'm just going to tell you what's happening on this one. So it gapped up a little bit from the 112s, and that's when it really spiked, was at the open. Spiked and got to a high of 275 roughly, and then it came down. And here's where it gets interesting, because if we get this volatility out of the way and we can see it a little better. We can see it based at 152 roughly. 152. So this is at 160, okay? 158. And it's not huge resistance, huge support in terms of the volume support propping it up, but it is a lone candle in this range. So that's what you want to look at. So knowing that, this is basically bouncing 5% below, which is not too bad because these are so non-exact. But then it makes a higher low and a higher low, and you can see this range being formed between 175 and this low of 150, and uptrending lows. So I bought the confirmation again because it's safer. The confirmation breakout over these bounces, and this is a pattern I tracked, and it works on low floats. This was a $4 million float stock, and again, I'm buying it on after volume, so we know it can spike off the lows. We've had higher lows, and I wasn't going for anything extreme. I wasn't thinking I was going to get back up here, but I mean, I thought they could reach 215, 225, and I'd be selling into that. But again, because of this market, it couldn't get there. And another great lesson to learn, because when intraday, when a multi 3-day chart, is perfect in terms of patterns, everything can line up. But because of one indicator that normally isn't rated too high on a scale, then the whole pattern, or that whole pattern specifically, this whole pattern, Seed's whole pattern, can not work. And I think you got to recognize that as patterns obviously don't work 100% of the time. They can't. They're going to change slightly, but you can play things right and get it wrong. Obviously, I know probably 99% of the chance or reason why this doesn't work was because of the overall market. But I can't base my trade entirely off of that. The odds are still here when I was trading it, but it didn't work out, and I think I know why it didn't work out, because of the market. So what I'm trying to say is, things don't work out for certain reasons, but you can't always see those things coming. My rating system is taking in all the factors, and of course some of them are going to be more important than others at certain times, but I can't micromanage those certain little points to make an overall score change plus 1 or 2 points. It doesn't make sense, and there's too much work for that. So that's why I have an overall score based on certain factors that I think are more important than others. They're going to get more points in the grand scheme of things. And this being so perfect in that sense, and it's off because of one indicator that I don't have a quantitative amount on how much it changes because the market is bad. I mean, I don't feel too bad. I still think this is an amazing trade based on my plan, based on my execution. I mean, like BGI was good, but I mean, and FEC and some others this past week, I still had that good, meticulous plan, but my entries still need work. I'm not gonna lie there. And I think by my tracking the data that I have been and getting that all sorted together, I think I'll be on my way to get into better entries. So if I can keep this good trading plans together and I can just keep adding the positive things I'm learning, then I'll be all set to go. So hopefully you guys are planning meticulously and avoiding indicators that aren't really great, especially in this market condition where everything's tanking overall market-wise. But good luck in the coming weeks, and don't know when I'll do another one of these videos, probably in the next 1 or 2 weeks, or if I have a really good trade or plan or setup I want to show you guys. But again, thanks for watching, and keep it up. Thanks.